Only mode.
Afternoon, ladies and gents. Simon Brown here. Doing the introduction, I'll be taking some questions for Alec Hogg. We're looking at the Biznews global share portfolio run through Webtrader. Before we go any further, if I can just confirm that you are receiving audio, that you can see the screen. If you've got a yay to both, just raise your hand in the GoToWebinar application. Brilliant. Hands coming in plenty. I'm going to hand over to Alec. If you've got questions, drop them in. If they're pertinent to the point in the presentation, I'll jump in and throw the question to Alec. And of course, we've got some time for questions afterwards as well. And as always, we are recording. But with that, Alec, the floor is yours.
Hey, thanks, Simon. And it's nice to, as always, be doing this update, but particularly nice this time around. Why, Simon? Why am I saying something this time?
We're making money.
Amazon.com.
Jeff Bezos.
30% jump in that share price in US dollars, not in rand. So our confidence in Amazon.com has paid off, and that has made a substantial difference to the portfolio. There it is there, the current position. You can see Amazon is now our best performer. We only got 50 of them. You say I only have 50, but if you remember last month, it was a dreadful underperformer. A 30% improvement in a month is enough to get anybody excited. And overall, the portfolio is now in front. We still got $30,000 in our nominal portfolio. Remember, we started with $200,000 here. We still got $30,000 that is available for investment. We haven't found anything yet to put it into. The structure of the portfolio is quite simple. 1/3 goes into Vanguard, S&P 500. That's the one down the bottom. Can you see my cursor on there? Okay. And as you can see, that's done quite well. We started the portfolio in December, but we had to, for technical reasons, begin again a month ago. So in the last month, it's done pretty nicely. If you go back to December, it's done extraordinarily well. But we'll get into that later. That's the 1/3 of the portfolio. What that does is it gives you the US stock market tracking through the S&P 500 Vanguard. Then we have roughly 1/3 in Berkshire Hathaway and Google. Google, because I think it's the best company in the world with a faultless business model, and Berkshire Hathaway because it is a replica of the S&P 500 in many ways, because it gives you an understanding. Berkshire is so big now, Warren Buffett's company, that it is exposed to the U.S. economy. So if the U.S. economy goes up, Berkshire will perform as well. As you can see, not a whole lot happened in the last month with Berkshire Hathaway. In fact, we're making a little loss there, but that's primarily in trading costs. Then we have 3 stocks that we've invested in 8% of the portfolio, and then we still have about 15% of the portfolio in cash. And those 3 stocks are Amazon.com, which has now picked up very, very nicely. As I say, 30% in the last month. We'll tell you why in a moment. RBM, which is a lovely value play, and then Novo Nordisk, which is a sad situation to see. That one's down 5% in the last month. So, but I'll tell you why I wouldn't ever dream of getting rid of Novo Nordisk.
Like a question coming through on Vanguard. There are a bunch of ETFs that track the S&P 500, and the question's asking me and you, asking me what my preferred is, but also why Vanguard, why not one of the others? They're all broadly the same.
Well, you know, it reminds me of when I went to Gorat's, which is Warren Buffett's steakhouse in Omaha. And the waitress, Kathy was her name, came to us and she said, "What would you like to eat?" And we said, "Well, what does Mr. Buffett eat?" And she told us it was a T-bone with double hash browns. So, of course, everybody at the table had the same. It's Warren Buffett's preferred ETF. He would have done his homework on this, you can be sure. And why we know it's his preferred ETF is just before last year's annual general meeting, he was asked what would he do with his wife's money, Astrid, if he were to pass away. Where is it going to? And he said he's will allocate it all to the Vanguard S&P 500. So that is the reason why I thought, why go and try and double guess the world's greatest investor? That's the one he likes. Let's go there too.
Yeah, it's a good point. And it's total expense ratio. We were chatting before we started recording, 0.05%. And I don't know how they run a fund at that sort of 5 points of cost, but you know there are a lot of them. I'm with Alec. If Warren Buffett likes it, heck, it's good enough for me. And an expense ratio like that, that's probably why Warren Buffett likes it.
It probably is indeed. And I think also, Simon, there that 0.05%, they are doing it all for you for pretty much nothing.
Yeah.
And costs are so important when it comes to index trackers. You can get index trackers that charge you a multiple of that, and you do see it over time. So if you're going to buy the index, you're going to buy the market, try and get as close to it.
Yeah, if you've got a 1.05% cost, you're going to, over 20 years, you're 20% down, but you're more because you've compounded that 20% out of your portfolio.
So that's the reason for it. Okay, so that's our overall portfolio. Let's go through the individuals. We started this portfolio on the 3rd of December. Those of you who were with us then will remember the Rand was at 11.27. It's now at 11.65. That's against the US dollar. So you're 3% better, even standing still on the Rand amount that you put in there. Of course, that's not the way that we calculate it, because we calculate the portfolio in US dollars anyway. We said we put in 200,000 US dollars as a nominal starting point, but it does give you an indication that we're moving in the, well, we're having some protection there against the Rand's depreciation. Annualized, that's 12%.
Yeah.
So it's quite a big, quite a hefty protection just for starting point. And then it shows you now that all of the stocks, with the exception of Novo Nordisk in Rand terms, are in front. These are very impressive returns for 3 months, but it's not what we're really looking at. If you annualize, for instance, Vanguard, that takes you to 20% in 3 months. Google to 24%. Amazon, well, there we go, extraordinary. Berkshire Hathaway, even 12%. These are good numbers in Rand terms, better than the double the South African inflation rate. But we really are looking at a long-term portfolio. So it's most unlikely that at any point in time, or certainly in the near future, we're going to be lightening any of these investments that we made. But it just gives you an indication or a feeling that why we like to invest offshore, not just because you have a wider range of opportunities, but because of we're in a country, in South Africa, which has a weak currency. Okay, starting off with the big, the 1/3 slug, well, 30% to be precise, slug that we have in the Vanguard S&P 500. As you can see, it very, very closely tracks the index. And in the past 3 months, that is, it's appreciated by about 2.12%. If you add in the returns there, add another Rand, so you're talking about 5% in the overall. And a very nice return it is. We will keep that slug of the portfolio in the Vanguard fund because we think that the United States has rebounded very well from the global financial crisis. It's interesting, just to digress slightly, when I was in Davos last month, there was quite a lot of discussion on the European quantitative easing. And the concern that was raised there was, although Europe it's only a fraction of what the Americans did, why quantitative easing might not work as well in Europe as it has done in America is because it's really meant as breathing space. So it's almost to give your economy breathing space while you address the underlying structural issues. Now in America, there aren't underlying structural issues. It's a highly flexible economy. Labor moves from one area to the other, and that's why it rebounds so quickly. In Europe, you have underlying structural issues that the politicians are very loath to get their hands around. And as a consequence of that, will quantitative easing work in Europe? Is a big question mark. Whereas in America,
and it's late. It's 4 or 5 years late.
And that on top of it.
On top of it.
It's interesting. There was a piece this morning that we published that is going on in France, where the French are now trying to do what they can within the political restrictions. And they're going to move from 7 to 13 days of the year that Sundays will be open for trading. Yeah, I'm saying is that only 7 days a year can you have Sundays trading on average. So the Champs-Élysées stores will now be open all year, every Sunday of the year. But that's where it's like, it reminds me of the old South Africa.
I was going to say, this is Durban in 1980.
Or Bloemfontein.
Bloemfontein. I remember Sundays, everything was shut. Everything, except the beach. In
Durban, in 19. Well, it's interesting now. If you think they have to fight for that little concession, my goodness, the underlying issues that are.
Whereas America's already that economy has just been working for 100 years.
Yeah, well, even longer.
The
founding fathers certainly knew what they were doing in 1776. So we like the American economy. They've had their quantitative easing. The economy is back on track. The most recent figures show 5% annualized GDP growth rate that was in the third quarter of last year. The US is the place to put your money. Amazon.com. Well, let's start with this of the individual stocks because it has been a gangbuster. There we go. You can have a look at the portfolio. It moved in the past month. It's almost like a month to exactly, where it's now up 17%, and a month ago it was down about 12%. So add that together, 30% jump in the past month. Our best performer in the portfolio. Why so? Well, on the 29th of January, and if you have a look there, you can pick it up just before the 29th. I think it was the 27th. People started thinking, could be good stuff coming from Amazon. And the share price shot up after the fourth quarter figures were released from this company. It is a NASDAQ listed company, and that's why we compare it with NASDAQ, which incidentally has been doing a little bit better than the S&P since our portfolio started anyway. The reason for this is that the numbers that Amazon produced for those 3 months to the end of December were better than everyone anticipated. Fourth quarter sales up 15% year on year to $29 billion. That took, if you had to add the exchange rate, because remember Amazon has a big international, about $10 billion of its $29 billion in sales comes from outside of the United States. So that would have an impact because the US dollar has been weak in that period. If you were to take the exchange rate out of the picture, then the sales would have been up 18%. So volume growth is extremely strong. Operating cash flows were up 25%, trailing in the last 12 months. And what that meant was if you took 2014 as against 2013, operating cash flows up 25%. Things are just going much better in the fourth quarter after the third quarter results were a little bit questionable. And they saw the share price of Amazon falling. This time around, things are going in the right direction. Interestingly enough, there's a whole lot. If you go onto the Amazon site and you look through the investor relations section, you'll see that they detail much of the information there. And amongst the highlights of the period was that in India they're now already, after just 2 years, the biggest online store. So although the Chinese have got Alibaba, in India they've got nothing similar. So in 2 years, Amazon's the biggest there, and that's huge potential into the future.
What struck me with Amazon, I was chatting with some Americans over the holidays. They order everything, from toilet paper to peanut butter. I thought this was crazy, but now I was looking for razor blades. I use a safety razor. I want the Gillette blue, blah, 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 blah. I can get them in South Africa. They're about 10 Rand a blade. I buy them from Amazon. Shipping, tax, postage, everything, 5 Rand a blade. So I buy my razor blades from Amazon. Okay, so I wait 12 days.
You've given us all a big tip there.
But I don't know how they do it. I mean, forget the sense behind it. I just know pure economics. I can see what I pay at my local store. And sure, they're imported. But it's almost the sense of what the average American, they get their, what they call it Prime, you pay $100 a year.
All the movies you can eat.
Yeah, and everything. Shipping free, the whole shebang. I'm finding more and more that I can just buy stuff on Amazon, and it's often cheaper, more convenient, wider range. Not yet buying my toothpaste and peanut butter, but razor blades.
Who knows? Or they're a logistics company as much
That's
as they
what they
are.
It's about the warehousing and logistics.
So
and it's probably shipping from, these blades are made in St. Petersburg, so they're probably shipping from a warehouse somewhere not from the US, but somewhere in Eastern Europe or Asia.
It's an extraordinary story. Jeff Bezos continues to reinvest. Yeah. All the cash flows go back into Amazon.com, and I think you were saying when we were talking about this off air before we started the webcast, that he's got a little switch. He can switch on. You want profit? Okay, I'll give you profit.
Yeah, because 3 months ago the people were complaining. When's this Amazon going to make money, etc., etc. And it's almost like he flipped a switch and said, "You want profit? Done. Here's some profit. Make the market happy. Carry on."
And here we see the share price. Very interesting story. In fact, it was $294 a share when we spoke a month ago. It's now $381. So thank you, Amazon.com. You make us look good. So does he, Warren Buffett. He's a gentleman who has been around for 84 years. I'll be going off in April to I think it'll be my 10th or 11th annual general meeting of Berkshire Hathaway in Omaha. I think you should join me because it'll be their 50th anniversary. 50 years since Warren Buffett and Charlie Munger took control of what was then a textiles company, Berkshire Hathaway. It should be very, very special. But when the American economy does well, Berkshire does well. The share price hasn't really done that great in the past month. In fact, it's interesting to, when you look back on Berkshire, it seems to have steps around about the time of the annual general meeting. So we're expecting that people will lose a bit of interest now. It'll bump along for a while. Then the AGM comes up in April, a little uptick there, and then after around 6 months, it tends to have another uptick. But this is a company that you can really put your money away and you can sleep well at night, because Warren Buffett.
What price does Buffett buy the shares at? They've got a floor at which they're
20%, 20% above. They used to have it at 110% of book value. So remember, book value in their instance is extremely conservative, because they don't revalue, and they've had some of the things in Geico they've got in there at a fractional value of its current value. Geico is the American equivalent of OutSurance, which is the market leader in the United States. I think it's the second biggest underwriter of motor vehicles in the United States, and it's all done through the OutSurance route. So, but that would be in at a fraction, and this is why they were at one point they were at 110% of net asset value. They bumped that up to 120% because they said no, even at 120%, sorry, of book value, is very, very cheap relative to what the company is actually worth. So you've got a floor there as well, I think is what Simon was alluding to. You've got a company that's going to be reflecting the movement in the US economy. We've got 15% of our portfolio invested there. The next one, the other 15%, or the other big slug, is in Google. It's got the perfect business model, as you can see the reflection. And again, on the 29th of January, when we had Amazon's results, we had Google's results as well. And you can see that the market picked up on that and pushed the share price higher. It was at the time, it was looking a little bit sluggish for the quarter. We were down about 3.5%. And as a consequence of those results, it's now up by 3%. So a 6% move in the share price since those results were released, and that's also for their fourth quarter results. Google was started in 1998. It says in the financial results that came through that the continued strength in core advertising is there. It would have made more money had the US dollar not been weaker, because it reports in US dollars. In its case, in fact, it gets more of its revenues now from outside of America than inside of America. Amazon has got as a spread of about 18 or 19 to 10. In Google's respect, it gets quarterly revenue of 18 billion. 56% of that, 10 billion of that, comes from outside. So it's interesting. Both Google and Amazon get 10 billion a quarter from outside of America in sales.
It's staggering numbers.
It's extraordinary. Well, when you put it into rand terms, it's 100 billion rand. Well, okay, let's not.
Most of the top 40 companies.
Go and the paid advertising was up, or paid clicks as they call it on their business model. That was up by 14%. Cost per click down by 8%. So what that means is that they're getting higher volumes at lower costs, and that gives you very, very happy customers. This we pulled out of the Google quarterly analysis, and it gives you again some very interesting analyses there. I like to look at these. You go back to that fourth quarter of 2012, and you can see how the revenues are going up and up. Very nice, steady improvement. And another thing there is the US versus international, which is pretty steady, slightly improving in the last 2 years, 54% international to 58% now. 56% now. So it is moving in the right direction. If you have a global business, America, of course, is very big, but the rest of the world is even bigger. I'm very happy with Amazon, very happy with Google, and those results helped Google's share price coming from around $496 a share to $549. So things going in the right direction. There's another little insight for you. The United Kingdom, an area which they split out as well, because they've got a pretty big business, does Google have in the UK. Right, on to our big blue, big value. A value play, IBM. I see it's getting more supporters almost by the day. We did have Ginny Rometty, the chief executive of IBM in South Africa, last week. She got a bunch of people together and gave a big show at the Sandton Convention Center. Unfortunately, I couldn't make it. I was, I think, in Cape Town on my way back here. But it is a company that is not just big in South Africa, but it's big all over the world. And you can have a look at its performance. Continues to lag a little in the last 3 months, underperformed the S&P 500. But this is not something to be concerned about. It is a business that is a value play, and IBM generating a lot of cash. They've focused into the future. They've made the right bets on the cloud, and this is a company that you can also sleep very well at night. Been around a long time, and their Watson, their new artificial intelligence innovation, is also going in the right direction. You like this one, Simon?
I do, and I know who likes it a lot is Nick Norman Smith from Lentis Asset Management, who way smarter than I'll ever be. And I got into an argument with him about it, and I'll be honest, he whipped me, and he knew what he was talking about. And he, to his point, we look at IBM and we think, 1970s. But you mentioned Watson. I mean, we know them from Big Blue, who beat Kasparov at the chess game, the Double Jeopardy, what's that TV show?
They beat both of the Double Jeopardy superstar champions.
Yeah, and I must say,
formed a team, and I think it was Watson that was up against him, not Big Blue, and Watson actually whooped them both.
I remember when Big Blue beat Kasparov, and I'm a chess fan and a Kasparov fan, and for me it was heartbreaking. But as a stock, what do? They're moving into the cloud. They're a little bit late, but never underestimate them. And they're a giant company. They're turning slowly because of their size, but they've got the core infrastructure of what the internet is, and what the computing world is.
The rating is very, very attractive, and that's really. Value investors are now investing in IBM. Warren Buffett has been upping his stake there as well. When you see the value players going for a stock that has the technology view or the technology assets that IBM has, and of course the global reach, this is one that again you can sleep well at night. Novo Nordisk. I don't know what is going on here, because this is a stock that has it has 50% of the world's insulin market. Think of that. The world is getting fatter. We are eating worse. Not everybody's following Tim Noakes' diet. And in fact, very few people are following his diet, relatively speaking. So the incidence of diabetes is growing. And if you get diabetes, it's quite a process to get the right cocktail for yourself. You go to your physician, and you will try over a period of time to find the right cocktail. And eventually when you get it, you don't want to go through that again. So if you get it, 50%, or there's half, the chances are half that you're going to have a Novo Nordisk product. There's also the new product that they're putting into the American market that hasn't got FDA approval yet, but it's likely to come. This is a cash cow that focuses on 10% growth, not 20, 50, 100% growth a year. They just keep it. They're a Danish business who say, let's look long term. Let's grow at, say, 10%, double digit, maybe 12, maybe 15. Let's not rip the backside out of it. Just keep the investing going. Keep a nice momentum so we don't attract too many competitors. What a wonderful business model. And then every now and then they deliver a whole lot of cash to shareholders through special dividends.
They're giant special dividends.
So why not have this as a core holding in your portfolio? Well, it's the only one so far in 3 months that hasn't done well for us. It hasn't actually made us a profit. But that, of course, means you can get in cheaper. Get in cheaper at this point in time. So that's Novo Nordisk. So that's really our portfolio, and I guess the end of our
couple of questions coming through, Alec, asking around rebalancing. So you start at 15%, Amazon goes crazy. Will you sell some down, or will you let that rebalancing kind of happen naturally over a life of a portfolio? Because, and we must stress, this is a long-term portfolio. This is not by any stretch, a trading portfolio.
I think we must take a cue there from Warren Buffett. What he's done, and some of his holdings he's had for 40 years, like American Express, is that he's bought them, and then as the cash flows have come in, he hasn't allocated more when they've risen.
So he would be putting into
proportion.
Nova, which is currently underweight, rather than Amazon, which is probably overweight.
That's what he would be doing. We if we had extra cash to play with, we would do that. I'm still sitting on that the 15% of cash, because I think we could probably in the next few months find another couple of good investment opportunities, and I don't want to get into a situation where we have to sell something to buy a new one. Every member of this portfolio has been carefully considered for its long-term attributes. You know, they say you should look at a unit trust on a minimum of 1 year, probably invest in it for 3 years, and if you're really smart, take a 10-year view. In stocks, it's the best holding period in stocks is forever, because they will go up and they will go through their cycles. I don't want to do that if possible. I like the way the portfolio is structured with 30% in the S&P 500, so you're getting 500 stocks there anyway, and then those two, Berkshire and Google, bring up another 30%, and the final 40% it will be eventually will be in individual stock players that you've got to really think about them before putting them in, and unless something dramatic happens, you wouldn't want to ever sell them down. So let's just let them run.
So, and that partly answers the next question, dividends. And I'm with you. That's broadly what I do. I probably picked it up from Warren Buffett. I don't sell down stocks. I'll put my new capital via dividends or money I'm putting into the portfolio into the laggers. I hate selling winners. They're winning.
I think what we'll be doing with dividends, and remember, we're not exactly getting dividends from most of the shares in the portfolio. Amazon, no divvy. Google, they don't pay a divvy. Berkshire Hathaway doesn't pay a divvy. So we really are letting them ride. And then Novo Nordisk, when those dividends come through, we should reinvest.
So Mark Campers has just tweeted something written by Anna Edney on Bloomberg. Novo Nordisk won approval of a weight loss injection, adding to a list of pharmaceutical options for Americans attempting to shrink their waistlines.
So they've won the approval. Yeah. Well, that's news to me. Thank you. Thanks for that.
Yeah, that's Mark just tweeted it. I don't know where he got it from, but it's sourced from Bloomberg, so that they just won that approval.
Well, that's good, because if you recall last month, they had been turned down by the FDA, and there was concern because that approval had been thought it would just come through as a natural progression. They were turned down. They then reassessed everything, went back with a appeal, and now good news. Thanks, Mark, for that good news. So Novo Nordisk, for me, then just buy some more. You know, if it is something that you haven't bought into the portfolio yet,
giving you opportunity. If I'm running the numbers right, we got space for 2 more stocks.
We do. We got about 15%, $30,000, and the idea was to have between 7 and 8% for each of those stock picks outside of the big. So we've got we've got 30% in the S&P 500, 2 big stocks who make up another 30%, that's being Berkshire and Google, and then the balance of the portfolio would be in individual stock picks. So far we've got the 3 of them, Novo Nordisk, Amazon, and IBM, and we are looking to maybe get a couple more.
Folks, I'm not seeing any more questions coming through. If you've got, quickly pop in the Q&A box. We're nudging our time, but we're happy to overrun by a few minutes. And you're off to Berkshire again this year. Will you go to the value conference ahead of the Berkshire AGM, perhaps? Maybe that's where you find one of your extra stocks.
That's exactly what I was thinking. Because last year that's when Novo Nordisk came up. Simon, it's become a week worth doing. Slowly but surely, the if you like, the satellites to the Berkshire Hathaway conference have improved in quality, and now there are there's a selection of things happening in Omaha ahead of the Saturday, the AGM, which is always the first Saturday, or usually the first Saturday in May, unless when it clashes with Mother's Day, then it goes a week earlier. But there's all of those opportunities to go, and this year there's some very good conferences. Last year was the Value Investors Conference, which is a 2-day event that I learned a lot at. This year there's one even before that, so I'll probably go a week early, probably go through a whole bunch of the conferences, maybe see if I can cover them. And these are not Davos type conferences or even the mining and Indaba. These are relatively small groups where you have top class presenters, and those presenters then give a presentation to everybody. Then I could take those presentations and then feed them back into our community. So that's kind of the strategy so far. We've got to just work out, dot the I's and cross the T's.
Logistics.
And get all of that. But that's likely to be the case in April.
Ladies and gents, I'm not seeing any more questions. We'll park it there. We will be back next month, which will be March. We don't have a date. I should have got a date. I will get a date. Of course we will get a date, and it'll be communicated and everything will get rolling out. Video will be online. Let me be safe and say sunrise tomorrow morning. I'll get it to them, but there's always logistics there. Well, thanks very much everyone attending. Alec, always appreciate it. Thank you for your time.
Oh, thank